Good morning and welcome to Dollars and Cents with Freedman Financial on North Shore 1049. My name is Marc Freedman, President and CEO of Freedman Financial, located in Peabody, Massachusetts, where we're providing financial advice in a language you can understand to individuals and families all around the North Shore, the Merrimack Valley, and the southern New Hampshire area. I hope you're all doing well this mid-August Sunday. Hard to believe that there's just a couple more weeks left to summer vacation. And the Red Sox have come through this year to ruin the rest of our summer. Yeah, they're done. I mean, it's time. I got my Celtics schedule this past week, so I get something to look forward to there. Hopefully they will be an entertaining team. I don't think they're a world championship team, but they'll be entertaining. It'll be fun to watch. A lot of youth on the team, a lot of excitement. I think that'll be a great showcase of stuff, and look forward to getting to a few games. Really have no interest in going to see the Red Sox for the rest of the season. I'm done. I'm done. It's just frustrating now. But you know, my kids are starting to go back to college. Perhaps if you have kids that are in college, they're starting to think about going back. Perhaps you're thinking about back to school for the kids in the elementary schools, the middle schools, the high schools. And if you're an empty nester, congratulations to you. No more worries about the kids for college or for high school. But ask yourself, are they still on the payroll? And unfortunately, many of the kids still are these days because it's our fault. It is our fault, folks, because we spoiled them. Yep, we did. We spoiled them. We gave them more than they, certainly more than we were ever given when we were kids. And we've been opening up our checkbooks for so many things for them that they established this this culture where they expect to have the best of things. And now that they're starting to live with their first paycheck, they're realizing, well, in order to continue to live the lifestyle to which they've grown accustomed, they can't do that on a entry-level salary. They still need mom and dad to help out. I'm not suggesting that that's something that is a good thing or a bad thing. I think there's a little bit of both there. But the biggest challenge that I talk to listeners about is how you will address it as an empty nester, as a parent. How will you balance what you continue to provide to your children, both monetarily and emotionally, versus what will you continue to do for yourself or sacrifice in your own life as you prepare for retirement while they're trying to build their nest egg, their lifestyle, their relationships, their families. It's a tough balance. It's part of the conversations that we have at our office at Freedman Financial all the time. You know, years ago, we had done a presentation. I forget even what the topic was. There might have been 80 people in the room. And I asked the question of the group. And most of these people were 60 plus, because most of our clients are, actually the average age of our clients, I just found out through a recent report, average age of our client base is 65 years old, which is good. As far as that's a sweet spot of what we want. But nevertheless, we have 80 people in the room. I asked the question, given the choice to live retirement to its fullest and leave whatever's left to the kids, or sacrifice retirement a little bit so that your kids could have a better life than you did, which would you choose? Which would you choose? As I asked that question to you, what would you choose? What would you pick? The first one or the second one? If you're given the choice, you're now in retirement. If I could live retirement to its fullest, spend what I want to spend to do what I want, and if there's money left over, great, I'll pass it on to the kids. But I'm not going to live my retirement thinking, oh my gosh, I need to continue to make sure that there's a nest egg that's left for the kids. Or just the opposite, saying, you know, I'm used to this lifestyle. I'm not going to take advantage of some of the things that I want to do because I'm really worried. I want to make sure that the kids have the nest egg that they deserve, that they need, so that they don't have to go through the struggles that I went through, or even just position themselves better for the future. What's interesting to me is chances are each person listening to that question has a very strong opinion, one or the other. You're thinking about the other opinion that I've offered up to saying, who would do that? And if you're a husband and wife or a couple or a spouse, whatever, you may have very opposite thoughts on that same question. And what we learned in that presentation that I made to the 80 people was that you drew the line right down the middle. It was 50-50. There is not a strong leaning one way or the other. Yet your bias feels like the bias that you have should be the bias that everybody has, of course. But it is not. What was fascinating, even more so to me, is many people who had come to this meeting, there were 80 of them in the room, some of them, couples, came with friends. And when asked to raise their hand about which option they'd pick, they were surprised, in some cases, shocked that their friends would react differently from the way that they reacted by that question. Folks, there is no right or wrong answer. My point in sharing that with you is just that. We all deal with money differently, and what we think is the right way to handle money is different, even to our spouse sometimes, but more so to our neighbors, to our friends, to our circle of connections, to our co-workers, to our community. I mean, we don't have to get into the political dialogue here, but I think you all well know that there are many people who have extraordinarily strong opinions on a lot of political positions that go on here in this country. Yet those that take that political position think that anybody that doesn't think like they do is just a moron. That is not what I call inclusive thinking. That is not what I call freedom. That is not what I call the opportunity to be part of America. We can have our opinions, but being able to respect the opinions of others, whether it's politically, whether it's financially, whether it's emotionally, whatever it is, if we are truly trying to be non-judgmental, to live in America, to live in a country where there are freedoms, we have to be accepting of the stuff that we don't necessarily feel comfortable with. And that's all part of the financial process, the financial planning process, because there will be some people that will insist that the only way that you become successful financially is to put all of your money in the bank, take no risk with economics, buy CDs, live off the interest, and if the interest is really small, well, then you better change your way of living. It's that simple. Or others that say, I want to live on the edge, and everything in between. What's the right answer? How do we approach it? And when you think about what's going on over the past couple weeks here in the markets, look, we hit all-time highs. Then the market drops 500 points. Then it goes up 300 points. Then it drops 400 points. Did you know over the past couple weeks, the average movement in the market, either up or down, average movement has been 450 points? Now, that might sound like a big number. 450 points movements when the Dow Jones Industrial Average is at 5,000, yeah, that's a big movement. But 400 points when the Dow Jones Industrial Average is in 24, 25, 26,000, it's not such a big deal. It's notable, but it's not that big a deal. I thought it was interesting this week. Someone was in the office and they saw that the market had gone up 370-something points. When I refer to the market, I'm referring to the Dow Jones Industrial Average because nobody really knows what the S&P is. If I asked you, what's the S&P at right now? People don't know that number. But they hear about the S&P. They know they want to beat it, but they don't know what the number is of the S&P. Frankly, most people, if I asked you what's in the S&P 500, most people will tell me it encompasses 500 stocks. Now, they're market weighted and adjusted, but there's 500 of the largest stocks. But you don't know what the number is. What did the S&P close at today? But if I asked you, what did the Dow Jones Industrial Average close at today, approximately, you're way more likely to tell me what that number is. But if I ask you, what is in the Dow Jones Industrial Average, you might go, I don't know. It's kind of odd, isn't it? The Dow Jones Industrial Average, just so you know, is made up of 30 stocks. That's it, 30 stocks. 30 stocks that are industry and sector leaders. And it's market weighted. The bigger the company, the more weighting is applied to that index. The same applies to the S&P 500, but you got 500 stocks. In the Dow Jones Industrial Average, it's 30. So when we hear companies like Facebook and Amazon and Apple or Microsoft or whatever doing well, not only are they doing well, they're really adding extra acceleration to the Dow Jones Industrial Average because they're amongst the largest stocks in that group of 30. You really need to understand the dynamics and how all of that economic works, because when you don't, we begin to make poor decisions, poor investment decisions. And in the next segment, I want to share with you a report that just came out from Dalbar. Dalbar is the industry leader in doing market research on investment behavior. And they just put together a report. It came out for the period ended 12/31/2018. It's called the Quantitative Analysis on Investment Behavior. And it takes a look at how rational are individual investors as opposed to how the market performs separate from them. We perform way different than the way the index does. And we'll talk about that when we're back. You're listening to Dollars and Cents with Freedman Financial on North Shore 1049.
I need a dollar, 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 that's what I need. Hey, hey. Well, I need a dollar, 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 that's what I need. Hey, hey. Said I need a dollar, dollar,